Good afternoon, folks. Welcome back. After a tumultuous red day, around these parts we like to call that a nice buy day. You've arrived to Buy City, it looks like. Now, let's go from the open when we were first talking about the price moves. We get again at 8:30, we get CPI numbers. Inflation is way hotter than expected. It's in it's in line with what we expected to see, at least a surprise, right? The market reacts in a very normal way, selling through the Nasdaq, right? So looking at the S&P here, but looking at the Nasdaq opens lower, sells quite a bit more, right? Even on, again, the value side, if we look at the Dow, we didn't really open much lower, but we started to sell through the average as well, right? And so what we saw was a full sort of sweep across the equity market. No specific index was up or down, more or less. Most of them all made the exact same move, right? Now, again, there is a difference between sort of when you look at the overall number, comparing the Dow to the Nasdaq. Nasdaq did lose about 0.5% more. And then when we looked, we saw the energy sector actually do pretty phenomenally during the open. Now, this carried actually down. It still closed about 0.5% higher by close, but it did actually follow the average through the rest of the day. And so when we start to look at some of these things, we're going to use banks as first. When you look at banks, all right, what is the most direct beneficiary in terms of a sector of inflation going up, causing interest rates probably to come back sooner than later? Banks are. Banks actually do significantly better during those during that sort of time of inflation we've seen in the past, and with interest rates higher, they would definitely do have more positive returns compared to other sectors out there. It traded the exact same way the Nasdaq did. Now it's only down 1%, right? And this is again where you got to start to put these things together, and why I've continued to say, oh, we're only down 2% from the high. Yes, you can say that we continue to sell again today, but it's important to, again, remember how far you are from the high in the difference between these things, so that you can continue to buy here confidently and not feel this sort of anxiety that things keep going down. And again, you got to put it into context of where you are. Now, it did sell a lot more than I thought. We continue to sell. Again, we saw this candle live, about 0.5% coming right before noon. Again, some of these things don't really add up on my end. Of course, we knew that there was going to be some reaction, right? We knew there was going to be reaction to inflation, and the market's been a bit worried about it, and we sold into the numbers. But now the numbers are behind us, and this is where, again, I don't think we can really time this. And again, you can look at this as very negative, but the numbers are now behind us. And this is where things get really interesting, because this is, again, the question. Do you think that prices are going to be up or down, and would you be willing to go short here? No one's going short here still. Now, who exited long positions? Leading up into these numbers, right? We were at all-time highs. We were at all-time highs on Monday across the entire across all indices besides the Nasdaq. Again, the Nasdaq has already been pricing in some inflation. We were at all-time highs. Okay, we've sold. We don't really count Monday as a sell day. It was a break-even day. Yesterday and today we sold about, let's call it 2.5, 3.5% across the board. Okay. Well, what are we going to do from here? Do we just price in the event, or is there going to be more selling? Traditionally, you sell everything at once. You do all your selling at once. You don't do multiple sales, right? And so this is where, if you remove that, let's say we've done the selling, how do you now price this? Well, I want banks. I want energy. I want anything on the value side that's going to go up due to inflation. And inflation we just got confirmation that those are going to go up. And so I'd be wanting to buy that. Okay, well, I'm getting thrown these numbers of negativity in front of me. Now, we had to transition from this point. We talked about from Monday, transitioning with energy, transitioning yesterday with some of these things, right? And so if there's a day I'm going to buy, wouldn't it be on a day that the candle looks like this? Now, we tried to buy this early. I tried to buy early, right? Now I got stopped out yesterday. Today, when I bought, there was no getting stopped out of these trades. I think the growth trades were probably the closest we got. I would say, excuse me, the closest I got when I talked about these growth trades. These are about as close as we got in terms of getting the low. It's probably the closest you're gonna get. Again, the Apple trade yesterday. I talked about the Microsoft trade today. It's about as close as I'm probably gonna get, and I'm okay with sitting in that position, even though this is on the other end of the spectrum, right? Because the reality is that at some point, again, you got to make a decision, and today would be the day. The numbers are behind us. We're going to find out tomorrow, and we're going to get confirmation. But this is, again, where a day, we need to be thinking further than just today. We need to be thinking further into the future of how we're pricing things, because the market is also doing that. And it's really easy to sit here and say that the market is actually pricing for things to come, right? Is the market pricing for things to come, or are we still rotating and we're sort of adjusting to what we see here? Are we just sort of taking a moment to adjust to the numbers, right? It's another surprise. It's another, it's another thing showing that price is going to be up. Is it that, or is it that there's actual weakness? I don't think anyone thinks there's actual weakness in the markets or the economy. I think it's, again, it's an adjustment and a digestion of what exactly should you be positioned in. It's one of those scenarios where, again, if you're invested into something, then you can't be invested into something else because your cash is tied up. We've been seeing a lot of portfolio rotation. Don't you think it's a little bit of, okay, I'm going to be exiting some of these positions to see what I can enter into thereafter? If we get a very big buy day tomorrow and we at least erase today's candle, then that's exactly what it is. That's exactly what I think is going to happen. Now, today is, again, yesterday I thought a very similar thing. We instead continued it through the numbers we got. I figured as soon as we get the data, the market would go, we priced it. Think of this earnings season, right? We already priced those growth earnings. And then as soon as the growth earnings came in, we started to sell them, right? I figured we'd get something similar. Let's just call it that with a little bit of lag here. So we can continue to trade through a bias. Again, it's a lot more selling than, again, even I even let on to think. And again, it doesn't make sense. It doesn't make as much sense other than if you put it into context, it would be rotation into, again, have cash, into really let the market play itself. If you're already in a long position with banks, you don't really care. But if you just transition like I did, wouldn't you wait as well? Wouldn't you wait for the market to also sell some more so you can buy at a lower price? That's what I would say the energy thing is here, is a lot of the energy move is, well, if there's going to be selling, I'm just going to let it wait. I'll just wait. I'll wait for everyone else to start selling so I can rebuy in here. Again, energy was up today, but when we think about some of these moves, how they don't really connect with each other, you need to also put it into, okay, I want to buy. I want to buy into value too, but it's been going up through all-time highs every week. Well, I'm getting an opportunity here to watch it go down. I'd like to watch it go down a little bit longer, right? You got to factor in some of that, which is not something I think I thought we needed to factor in. I figured we would be buying immediately, which we did see on this side of the board with our benchmarks. Let's see how we get into tomorrow. Now, if you took some of these trades that I did today, I think we do need to figure out what exactly we need to do if, let's say, tomorrow opens lower, right? And so let's just say you bought the Dow like I did today. Now I started to buy somewhere up in this area, around the 339 area or so when we were on the call, and we actually came in about another 0.5% or so. Now, the question is here is if we do open lower, right? Let's say we open, let's say, what's in the reason? Let's say 0.5% or so is probably within reason. I don't think you stop out on that. Yesterday, sure. But today, again, through today's intraday action, no. And through any opening action, no. I don't think we can do that, because if that does happen and then there's not a bounce, then we'll sell it. We'll sell it at some point there intraday. and or the next day, because again that would mean there's actually a change happening, because at that point there's too much time being involved. Right now we again have a situation where we're losing time, not value so much. Again, I think there's still in the market there's still a lot of reasoning for why prices will go bid from here and be bought. And again, when you put into the all-time high context, we haven't actually lost much. Again, everything looks basically the same. It is a lot of selling, of course, comparatively. If we open lower, I'm not going to get stopped out. I'm going to hold it. But if it then, again, we start losing more and more time and we do something similar where we continue to trend on a very slow sort of pace, then I'm going to go, okay, I'm going to switch my bias here and I'm going to be patient and wait. Right now, we're being aggressive still, right? It's important to note that we are still being very aggressive buying. If you think about just even a couple months ago, we were very patient, right? We would watch this in other normal circumstances. And some of you can still take this sort of approach if you're maybe having a hard time with sort of the tenacity in which we're trying to trade through right now. We would wait for this to break out to buy it. We would be sitting here going, we're going to wait for this to consolidate before we buy it. Right now, we are aggressive. We're buying here because there's a lot of reasons to do so. Always protect your downside first. Right now, I feel like my downside's protected. I'm not going to lose very much by doing so. If you are, then you're not protecting your downside, which means you do need to switch it up. Having a sizable amount of capital here helps significantly. If you are on the lower capital side, then this is definitely being you're definitely having a lot more weakness due to the way in which you're entering, because you're not getting exposure to enough, which means you've got all your eggs in the basket and the basket's going down. You're having a hard time probably doing that. Again, these situations are the exact same as you're going to the upside as well, right? There's no difference between going through the upside and missing that move, right? This move that's gone through all-time highs. If you didn't profit on any of this move, then you're probably losing more than those of us that did profit here from just the exact same virtues there, right? And so it's important to be playing the risk management game over the risk sort of, oh, hopefully I make points on this game, right? And you shouldn't be sitting here hoping. No one should be. If you took trades today and you're going to sweat all night, then you probably shouldn't have took those trades, right? I feel confident taking these trades. I felt confident yesterday. Now I got stopped out of things, but I can still be confident taking them again. This is where I put it to a test, right? You really get it put to a test what you think when you get a candle like this, and when if tomorrow it does open lower, right? And so that's where again I'm only gonna allow so much downside before I change a little bit of my mentality, right? It's important that we follow price, not ideas. Right now, the idea is so strong in this macro. The macro side of the equation is so much stronger than the short-term moves here, which is why we're thinking in that way. Those things can change. They can absolutely change, right? So let's see what we get. Again, we could have said that we said that today, but today we finally got the numbers, right? It's very different because we had the actual event today. I didn't see much in terms of the meeting. I talked about going into lunch that we had the meeting with Biden and members. Republican members talked about not wanting taxes still, but we didn't get they're willing to compromise on spending. So the spending still looks like it's on. It didn't seem to really affect the market much. So it's unclear about whether or not there is concern about spending being cut back. Again, that's what I would have chalked up some of that selling right when some of that came out is some news sort of ideas. The thing here that I feel very confident on is that, again, inflation hurts growth. It benefits value. When you see the entire equity market and everyone loses today, and it's just across the whole board, that's just sort of lazy trading, and it's not very specific. And that's where those of us that are actually targeting specific areas are going to generate alpha. And this is why when I talked about during lunch that I'm taking these low trades again, I'm going to be going a little bit more aggressive on those value areas. On the tech side, again, those are risk already. They're already risky trades. I don't need to get too mind boggled over going crazy on them. I'm happy with what I got on them. I think Microsoft was probably the most risky, what we saw. When you look at the rest, Amazon still posted a higher low, so yesterday's trades were still okay. I think those of you that took these trades yesterday as well saw that your volatility actually lifted your positions and you did pretty well. Again, think about it even on these trades. For those of you that maybe had a tough day today that then didn't buy, look at just what we did yesterday, where we actually lost a lot. And actually going into CPIs, it's pretty fucking scary to hold on to growth. These trades, if you didn't take them today, you didn't take them yesterday, it's the same sort of thing here where, again, every trade that you don't take is going to be one that you're not going to get back, right? And so this is where it's okay to be safe and on the sidelines. It's okay. There's nothing wrong with that. But do you want to be in a position again where you watch prices go and then you're not sure if you should enter or not because prices are going up so quick? You don't get to decide when this happens, right? I don't get to decide. I think, again, may have an opinion on when I think prices may change. But no matter what our opinion is, it doesn't change what's going to happen. All we can do is react, right? What I know is that I don't want to sit here, just like I talked about last week, and I don't want to sit here and watch prices go up in front of me. I'm going to continue my mentality of the best day to enter was yesterday. That's still the exact same thing happening right now. It may not look like it today. It may not look like it yesterday, but that's 2 days. This is 2 candles. That's 2 candles. That's it, right? That's it. It's the same thing. Why? Because you lose less money going down compared to how much you make going up. The percent you lose going down is not even close to the percent you make going up for the exact same amount on the underlying. Because we're making an exponential through the upside. You're getting stopped out a couple times. And when you're selling here, you're not losing the whole thing. But when you're long, you're making all of it, right? It's not even close, right? It's not even close. So that's why I'm willing to, I talked about it yesterday, I'm willing to take 10, 15% of a loss on some of those. I was talking about the growth positions yesterday. I'm willing to take 10, 15% of a loss on those growth positions because you know what the upside is? The upside for that exact same move is 50, 60% for that 1 day move. Yeah, I'm going to take those odds. I'm going to take the probability there, right? And when you look at the value side here, it's a completely different thing. It's even further the other way. You're not going to make 100% from the trade, but your downside's not even related, right? Your downside here, again, you need to put it in relation to the long positions. It's not happening. There's no long positions being sold through here. Looks like it. It's these positions right here. It's the transition period. It's the transition positions, and this is where I've talked about when we start to look at the option area and the option space. We had a lot of hedging going on through here. I talked about the hedging. Those hedges most likely got all taken profit today because, again, the event just happened. We always see that after a big event, which, again, this is a big sort of event that got hedged, the inflation number came out, you take profit on the hedge, those are gone now. And so now we're back to this without the hedge. This move happened with hedges on. That's no longer the case. I can be wrong. I could be right. If we're wrong, we lose small. If I'm right, we win big. Which one do you want? If you don't play the game, you're not going to have any fun. You're not going to make any money. I find it very unlikely that any of us are going to blow up our accounts for just trying to be long right here, right? If we do, then I would call that a market crash. Is the market going to crash right here? I haven't seen one article about bubbles, anxieties, or anything like that. You would need that for a crash to happen. People would need to actually be in some sort of scare here, panic. There's no one actually panicking. If there's no one panicking, then what are they doing? Well, there's rotation. People are buying certain other things, right? It's not happening, right? As much as some of you may want it to happen, right? Now, I wouldn't mind a market crash. We can go buy lower. I'll exit my positions and wait for it to go to the bottom. We're not getting that though, right? It's just not even in the realm of possibility because it's not linked with how the economy is working, how other super cycles are working. again, it's like saying that a housing crisis is going to happen right now when we actually don't have anything set up for a housing crisis to happen. There's just a shortage of supply of houses, but there's not a speculation. There's not a mania. You can call some of the things mania, but again, we're not in this sort of situation where some of these things can happen. This is why I talk about banks and energy. There's actually nothing that can stop those moves from happening. It's the same thing. Some of you probably saw the prices here today. You get a really good price on banks. This is where you take those trades today. It doesn't take much tomorrow to be up a significant amount. We're talking, look at this move. 3%, let's say, happens in the next 2 days by the end of the week. That's almost 100% trade if you trade it through an individual bank. That's almost 100%. It's almost 100% if you took those trades when it was selling. Now, you may be down 10% or something right now. If you bought, let's say, like halfway through this candle, maybe not that much, but you know what I'm saying? It's still worth it in my book to take that because what? Tomorrow you may open a little bit lower. That's your risk. No one's gapping down. It's a lot. There's a lot. I don't think the market is exactly, let's say, in the same sort of viewpoint as I am. And that's where I think, again, there's definitely some room for error. And again, today was an example. Room for error. There's some timing issues, for sure. But the market does have the same viewpoint of the long term. And it's what the inflation numbers mean. And it's what the price action means, is that we're all pricing higher prices in the future. We're talking like by the end of the year, right? Everyone's pricing the same idea. It's what happens right now that people are having basically different opinions on. This is where the money's made. Otherwise, we're just making the same money as the rest of the market, right? If we're just trading everything the exact same way, then we're just all making the same amount. This is where, again, you can get alpha. And if you look back to those of you that were trading through COVID, yeah, the market went up, but there was a lot of different opinions. If you had a more aggressive long-term opinion, then you made significantly more than the next guy. It's the same here. It's the same here. You can look at this and be, nervous and unsure and do nothing. But it is the ones that are going to take the risks that are going to get paid. There may be losses along the way, but that's how the equity market works. We did see further moves in the bond market. This again is very much lined up with the inflation numbers. It did pick up towards the end of the day. We actually didn't see any reaction whatsoever when the numbers came out, which I thought was going to be one of the funniest things, is that we were going to do almost nothing because we already priced everything. Obviously, that was incorrect. We didn't price everything, and people were literally just waiting, which I've talked about a lot, is that for whatever reason, we continue to wait until the numbers come. Why? I have no idea, but it's most likely because everyone's already long everything. Again, we're long from this whole move, right? We're long. So again, when we talk about selling long positions, you're selling the long positions from this all-time high, not this all-time high, this one. So again, these things are different. So the bond market showing us that there is sort of a discounted growth still. There is the possibility that all goes away by tomorrow. If that does happen, with the dollar coming down as well, and Asia has a good day, Europe had a good day today. Europe was fine. They didn't give a shit. That's because, again, the value trade's very good. They're all value. If we get everything coming up tomorrow, again, I think we're basically hit it on the head in that you should have been buying here, and that there's not really an anxiety. Watching this tomorrow is going to be really interesting. We have BABA earnings coming as well. I don't know how much this matters. It mattered over here for growth. If you remember this move through the Hang Seng, this is when our growth market was doing very well. And as soon as this started not doing well, it was a global sort of situation where all growth did poorly. But the Hang Seng has continued to do very poorly. I talked about it breaking out of here, but it didn't. It was very much in line with our equity market. Watching this move here, I think, is going to be a bit important because it's going to show some risk appetite. And it's also going to show whether we we are pricing some sort of discounted growth on our side of things, while actually pricing higher growth in China, for instance. Looking at the differences between China's CPI numbers and ours, it's hard to tell how that would work. But if we do see this go bid while our equity market sort of prices down growth, then that means we actually have growth, basically cash that's usually in growth, actually going to emerging markets and going to other sort of tech heavy markets. If that does happen, then we need to be mindful that there is outflow happening during that. We've seen nothing but inflow still in our equity market. And again, I even when prices go down, they can still be inflowing. It's when these start to get going while our market goes down that we can actually say there's an outflow. I think this is going to be important to see tomorrow because, again, the numbers just came. Is this money going to continue to come to our side? These are questions not answered. The dollar moving, the VIX moving. These things are all sort of, again, surges, just like the data was a surge, right? The inflation numbers were a surge. It's a shock. Is it just a shock and it goes away? That's the question. I'm pretty sure 9 times out of 10 it's just a shock and it goes away. We want to buy when the VIX is high. The VIX has not moved. Volatility has not moved. It's a gift if the prices do go up tomorrow. And this was our buy because, again, we just bought when there was. It's almost ironic. It will be, if prices go up by the end of the week, it will be all ironic because, again, we're pricing something that tells us that prices are going to go up. We're pricing prices right now down because something says prices are going to go up in the future. Isn't that a little backwards? Isn't it backwards that we're selling when we have numbers that tell us that prices are going to go up in the future or that they are going up right now? Some of these things are a little backwards. And again, it's an idea of we're pricing something that hasn't happened, which is the pricing right now of the negative is the Fed's not going to be able to handle this inflation. That's the negative side of things. The Fed's not going to be able to handle this inflation. We're going to have a problem. When did we start pricing things that have not happened? We've never done that. We never do that. The market never does that. That's called being irrational. Markets can be can be irrational longer than you can be solvent. I could buy all the way down for the next 6 months and I would be solvent while that market becomes irrational. Is that really likely to happen here? Probably not. We're much more likely to be irrational to buying on the upside because that's how we are. That's just it. And so, again, you start to put things together. Your downside is shrinking more and more here, especially when you see something like this. Again, for this to wake up, while if you go look at VIX futures or options, still no one's pricing more, and everyone's still selling volatility. So, what do you think? What do you think what's going to happen here? I do want to note just a few of these tickers that were up on the upside. Bio continued to have some interesting moves, and again the oil side showed a ton of bid. It's going to be interesting to see again. Most of them closed higher. It's going to be really interesting to see how this move continues tomorrow, because if we were able to basically be up almost 3.5% on the whole energy sector today at one point, what do you think is going to happen tomorrow if the market's just flat or goes bid? I mean, some of these things, again, start to open up a lot of possibilities. In terms of pricing here, it's a major sort of factor of our portfolio right now is the energy side. We're going to continue to trade it. You can see where the transitions, again, we've gotten a little lucky on transitioning some of these things when we take profit. We don't take profit because we know when the top is. We just take profit because we don't know when it is, right? And so those of you that didn't transition and maybe got hit yesterday and then maybe again today, it sort of happened in some way that you're like, oh shit, I could have just transitioned the last time I saw it. This is why we do that, and also why we continue to buy for the same sort of the same reasons, because again, we don't really know the timing, but we know how to trade it because of risk management. And this is where, again, when you get a signal to transition a trade, do it. Just do it. You don't need to sit there and play like a gambling game of, well, I mean, my position, I have a delta of 1 and my position's been going up for a while, and you're sitting on a big unrealized gain. That pressure should build up and you should go take that profit so that you can re-enter the trade. Some of you that maybe took on losses again the last 2 days off of the top of your profit that have held through, maybe you now need to look back and say, okay, I'm only like 3% off my high, but I knew I could have taken profit a couple days ago or a few days ago, right? Or today or yesterday to transition this trade. Why didn't I? And did I get a signal to do that, right? There's plenty of positions that I was pretty lazy on that I talked about. I transitioned energy, but there's plenty of positions that I was lazy on and didn't transition. I was just sitting there waiting for a trend line. I knew I should have been transitioning those, taking profit, take the money home, take it to the bank, right? And I'll look to re-enter them. It would have been nice to re-enter them yesterday or today. And again, we can say that in hindsight, but we got those signals before. And again, we have to use the hindsight to be critical of ourselves, to see what we could have done. We're going to be able to be critical of ourselves the last 2 days here and to see if we're being are we right or wrong with this aggressive mentality of buying? We're going to find out. We're going to find out this week, right? Because again, if it keeps going down for the whole week, well, then obviously you should have been on the sidelines and been patient, right? We're going to find out. So we're going to be here in the morning. Based on where price opens, I think you're going to know already, right? We're all going to know it's either going to open up high or it's not, right? This is a lot of selling. Historically, you should have at least a return to about halfway through what we lost. So we should be gaining at least 1% tomorrow, right? If we don't at least do that, then we need to start to think consolidation, start to think okay, how's this money going to get positioned after? And we'll talk about that if that happens, right? That's what I got. The other thing, gold. We didn't see much here. We did see this roll over here. We're going to be watching this as well. So again, in terms of we have all other commodities still really continuing, and at least didn't sell as much as gold did here. Again, the question is this trend line here on gold. This will be interesting. And again, here's your bullshit indicator. I want to make sure this is very clear. Go Google, how do you hedge inflation? You'll have some posts telling you that you should hedge with gold. Did we not just get the biggest surprise on inflation since like 2008 in terms of like a shock? Then why is gold selling so much? I thought this is what you're supposed to buy if inflation happens. Why is it being sold, right? Really makes you think, doesn't it? Because again, what are people going to do? Well, right now we have a lot better option, right? We have a very good option of buying value. And so let's keep this idea in our mind a little, because again, that's not so much a reality. Same with, well, buy real estate. Well, it's kind of hard to buy real estate if there's none available, but maybe that's what they're doing. I guess they're hedging inflation by buying the exact same inflationary asset. That's just called buying something that's going to appreciate, right? And so again, there's plenty of signals out there. There's plenty of ways you can find a bias. We're not going to know until the price action comes. We'll react. And I think, again, just staying confident in not losing it and to stay consistent with discipline is the most important thing. So, again, losing today to win tomorrow. If I lose tomorrow, then it'll be to win the next day again, right? And maybe I'll just keep pushing out the time frame so I can feel better, right? Whatever you need to do to keep yourself going, right? Because you know what gains are out there. So, again, don't let the red day fool you. There's a lot of green in the future. That means money. So I'll see you in the morning. Enjoy your night, your evening, your afternoon, wherever you are. Watch out for some charts and enjoy.